Who is Satoshi Nakamoto and why it matters? In October 2008, Lehman Brothers, one of the most powerful financial institutions on Earth, collapses under the weight of its own debt. The United States Congress approves a $700 billion bailout to prevent total systemic collapse, and millions of families lose their homes, their savings, and their faith in the system that was supposed to protect them. In that exact moment, while the world is watching the financial order burn, a document circulates quietly on a small cryptography mailing list. 9 pages. No cover letter, no credentials. Just a title. Bitcoin. A peer-to-peer electronic cash system. Nobody knows it yet, but those 9 pages contain an idea that will challenge banks, governments, and everything we think we know about money. 3 months later, on January 3rd, 2009, the first block of the Bitcoin network is mined. Inside it, a message is embedded in the code. Permanent, immutable, and deliberately chosen. The Times, 03 Jan 2009, Chancellor on brink of second bailout for banks. The person who wrote it signs with a name nobody recognizes, Satoshi Nakamoto. Here is what we know about Satoshi Nakamoto. They launched a financial system now worth trillions of dollars. They hold an estimated 1.1 million Bitcoin, a fortune approaching $100 billion that has not moved by a single coin since 2009. They disappeared completely in April 2011, leaving behind a short email. I've moved on to other things. That's it. No photo, no interview, no verified identity, no country of residence. For 16 years, the most consequential financial innovator in modern history has been a ghost, and the ghost left behind the most valuable unclaimed fortune on Earth. What makes this more than a curiosity is what it means for Bitcoin itself. The Satoshi wallets are the ultimate sword of Damocles hanging over the entire crypto market. If those coins ever move, if whoever controls those private keys decides to sell, it would be the largest single liquidation event in financial history. Every investor in Bitcoin is, knowingly or not, betting that Satoshi stays silent forever. This is the untold history behind the most valuable fortune nobody can spend. And right now, it is more urgent than it has ever been. In April 2026, just weeks ago as of this recording, the New York Times published a 12,000-word investigation by John Carreyrou, the Pulitzer Prize-winning journalist who broke the Theranos fraud wide open. His conclusion: Satoshi Nakamoto is most likely Adam Back, a 55-year-old British cryptographer, CEO of Blockstream, and the inventor of Hashcash, the proof-of-work system that Bitcoin is built on. Adam Back denied it immediately. The crypto community pushed back hard, and the mystery got deeper than it has ever been. This video covers everything. The origin, the 30-year hidden history of a movement that made Bitcoin inevitable. Every serious suspect, Hal Finney, Nick Szabo, Craig Wright, Peter Todd, and now Adam Back. The Patoshi pattern, the forensic blockchain fingerprint that tells us exactly how Satoshi mined and why he deliberately protected the network while doing it. The NYT investigation that may have changed the question from who is Satoshi Nakamoto to what happens if we actually find out. And the investor implications that nobody else is talking about. This is the greatest unsolved mystery in the history of modern finance. Let's follow it from the beginning. To understand who created Bitcoin, you have to go back further than 2008. You have to go back to 1988, to a garage in Santa Cruz, California, and a document that almost nobody read at the time, but that laid the philosophical blueprint for everything that followed. Timothy C. May was a senior scientist at Intel who had retired at 34 after his research on alpha particle interference in computer chips earned him a private lab and enough stock options to spend the rest of his life thinking. What he thought about, obsessively, was the relationship between cryptography, privacy, and political power. In September 1988, he wrote a 497-word document in an hour and a half and distributed it at a conference of like-minded technologists. He called it the Crypto-Anarchist Manifesto. The opening line, "A specter is haunting the modern world, the specter of crypto-anarchy." May argued that computer technology was on the verge of allowing individuals to communicate, transact, and exchange value in total anonymity, beyond the reach of governments, beyond the reach of surveillance, beyond the reach of taxation. He was not describing what existed. He was describing what was coming, and he was right about almost everything. The Cypherpunk mailing list. In September 1992, May co-founded a mailing list with 2 colleagues, Eric Hughes, a mathematician, and John Gilmore, an early Sun Microsystems employee and civil liberties activist. They called themselves Cypherpunks, a portmanteau of cipher and cyberpunk. And the mailing list they created became one of the most consequential intellectual forms in the history of technology. At its peak, the Cypherpunks mailing list had hundreds of subscribers. They were cryptographers, mathematicians, programmers, lawyers, and political theorists. They shared code, argued about philosophy, and built tools. Phil Zimmermann released PGP, Pretty Good Privacy, through the Cypherpunk network in 1991, giving ordinary people access to military-grade encryption for the first time. The US government tried to prosecute him for it. They failed. In 1993, Eric Hughes published a Cypherpunks manifesto, which stated the movement's core principle with precision: privacy is necessary for an open society in the electronic age. We, the cypherpunks, are dedicated to building anonymous systems. The cypherpunks did not wait for permission. They wrote code. They released it. They believed, in the words of Hughes, that cypherpunks write code. And through the 1990s, they built the cryptographic infrastructure that would eventually make Bitcoin possible. The failed attempts at digital money. The cypherpunks understood early that money was the ultimate target. If you could build money that was cryptographically private and decentralized, you could create a form of economic freedom that no government could touch. They tried. Repeatedly, and they failed. Repeatedly. David Chaum, one of the earliest and most visionary cryptographers, founded DigiCash in 1989. His system, eCash, allowed truly anonymous digital payments using blind signature cryptography, a technique Chaum himself had invented. It was mathematically elegant and philosophically aligned with everything the cypherpunks valued. DigiCash filed for bankruptcy in 1998. The reason? It required banks to adopt it, and banks had no interest in enabling anonymous transactions. Wei Dai, a computer engineer who had been active on the cypherpunks mailing list, proposed B-Money in 1998. His white paper described a distributed ledger where participants validated transactions using cryptography, without any central authority maintaining the records. It solved parts of the problem, but it had no mechanism to prevent double spending, the fundamental challenge that had defeated every previous attempt at digital cash. B-Money was never implemented. Nick Szabo, a cryptographer and legal scholar who had also been a regular presence on the cypherpunk lists, published his concept of BitGold around the same time. His system was remarkably close to what Bitcoin would eventually be. Computational puzzles, generating tokens that could be chained together in a time-stamped ledger, with value derived from the proof of work expended to create them. BitGold was conceptually brilliant. It still had no working consensus mechanism. Adam Back had invented Hashcash in 1997, originally designed to fight email spam by forcing senders to expend real computational energy before their message would be delivered. The insight was that computational work was a scarce, unforgeable resource. You could not fake it. You could not copy it. It cost real electricity to produce. Satoshi Nakamoto would later cite Hashcash directly in the Bitcoin white paper as the foundation for Bitcoin's proof-of-work mining system. By 2008, the cypherpunk movement had been working on this problem for 20 years. They had all the pieces. What they lacked was the synthesis. Someone who could combine the distributed ledger of B-Money, the proof-of-work concept of Hashcash, the chain timestamping of BitGold, and a working consensus mechanism that solved the double spend problem without any trusted third party. That synthesis arrived on October 31st, 2008, in a 9-page document from someone nobody had heard of, signed with a name that appeared to be Japanese. Whoever Satoshi Nakamoto was, they were not an outsider. They were the final product of a 30-year movement. Before we go into this next part, quick pause. If you've made it this far, you're not just watching, you're actually trying to understand where all of this came from. So I'm curious about you. Where are you watching this from right now? What city are you in? What time is it there? And what's the weather like today? Drop it in the comments. I read more of them than you think, especially from the people who stay for this part, because the ones who stick around for the history behind the system are usually the same ones who start seeing where things are going next. Now let's go back, before Bitcoin even existed. On October 31st, 2008, Halloween as it would turn out, Satoshi Nakamoto sent an email to the cryptography mailing list, a successor form to the original cypherpunk list. The subject line, Bitcoin P2P eCash paper. The message was brief. It described a new electronic cash system and linked to a 9-page PDF hosted on bitcoin.org, a domain Satoshi had registered 2 months earlier through a company that destroyed its customer records. The white paper was titled Bitcoin, a peer-to-peer electronic cash system. The responses were muted. A few experts engaged with the technical details. Some pointed out potential flaws. Most moved on. Nobody recognized that they were reading one of the most consequential documents in the history of finance. Among the handful who responded seriously was Hal Finney, the cypherpunk veteran who had built reusable proof of work in 2004, one of the most direct predecessors to Bitcoin's consensus mechanism. Finney immediately grasped what Satoshi had done. He replied with technical questions and genuine enthusiasm. The email Satoshi sent before publishing the white paper is itself a clue worth examining. Before going public, Satoshi wrote to Wei Dai, the author of B-Money, asking to confirm the publication date of his 1998 proposal so Satoshi could cite it correctly. Satoshi also mentioned Hashcash in that email and linked to hashcash.org, Adam Back's site. This was not the email of someone who had stumbled onto these ideas recently. This was someone who had been tracking this intellectual lineage for years, who knew exactly where their invention fit, in the history of the ideas it was synthesizing. On January 3rd, 2009, Satoshi mined the first block of the Bitcoin network. The Genesis block, block 0, is hard-coded into the Bitcoin protocol itself. It cannot be removed. And inside its Coinbase transaction, Satoshi embedded a text string that has no technical function whatsoever. The Times, 03 Jan 2009 Chancellor. On brink of second bailout for banks. This was the front page headline of the Times of London that morning. Not the New York Times, not the Washington Post. The London Times, a British newspaper selected deliberately on the day Satoshi chose to launch. The message is a timestamp, a political statement, and a geographical clue simultaneously. It places the genesis of Bitcoin in the context of the second bailout of British banks. It announces that the system being launched is a direct response to the failure being reported. And it suggests to anyone paying close attention that whoever wrote it was British, or at minimum deeply engaged with British financial politics. The Genesis block also rewarded Satoshi with 50 Bitcoin, the standard block reward at launch. But those 50 coins are permanently unspendable. Satoshi designed it that way, building a flaw into the Genesis block's transaction structure that makes the reward unclaimable. It was not a mistake. It was a statement. These coins were never about the money. On January 9th, 2009, Satoshi released Bitcoin version 0.1 to the public on SourceForge, a platform for open source developers. When the software went live, only 2 computers were running it, Satoshi's and Hal Finney's. Finney had downloaded it immediately, posting on Twitter on January 11th, running Bitcoin. On January 12th, 3 days after the public launch, Satoshi sent Finney 10 Bitcoin, the first transaction in the network's history. The system worked. In those early months, Satoshi was the primary miner on the network. This created a forensic record that would take years to fully analyze. In 2013, blockchain researcher Sergio Demian Lerner, chief scientist at RSK Labs, published a study that would become one of the most important pieces of evidence in the entire Satoshi mystery. Lerner analyzed the extra nonce field in early Bitcoin blocks and found a distinctive pattern. A single miner had used multi-threaded processing in a way that left consistent, identifiable signatures across thousands of blocks. The pattern, which Lerner carefully named the Patoshi pattern to avoid making definitive claims, pointed to a single entity that had mined approximately 1.1 million Bitcoin between 2009 and 2010. Not a mining pool, not multiple coordinated miners, a single operational setup running unique software that was more sophisticated than the public Bitcoin client Satoshi had released. The mining code Patoshi used included multi-threading capabilities that did not appear in Bitcoin's public codebase until 2010. In other words, whoever Patoshi was, they were running better software than they had given everyone else. They had given the network a client. They had kept a better one for themselves. But here's the detail that tells you everything about Satoshi's intentions. Lerner's analysis showed that Patoshi deliberately throttled their own hash rate, repeatedly in documented steps, to let other miners claim blocks. When the network was small and vulnerable, Patoshi was artificially limiting their own mining power to ensure that block production was distributed across multiple participants. They were sacrificing Bitcoin they could have claimed to make the network appear more decentralized than it actually was. Satoshi was not mining for profit. Satoshi was protecting an infant network from the one vulnerability that could have killed it, the appearance of central control. Not a single one of those 1.1 million Bitcoin has ever moved. The writing style. In those early months, Satoshi was also extraordinarily active in correspondence. They responded to every email, reviewed every bug report, and engaged with every technical question. The writing was formal, precise, and occasionally warm. Posts had a distinctive cadence, measured sentences, British spellings in some messages and American in others, a toggle that several researchers have noted as potentially suggesting in either multiple authors or someone educated in both systems, and a consistent habit of placing 2 spaces after every period. That double-space habit is a relic of typewriter-era typing conventions, suggesting someone who learned to type before word processors were standard. Combined with the time zone analysis and the London newspaper reference, the geographic and generational profile was sharpening. Stefan Thomas, a Swiss programmer, assembled the complete timestamp record of every post and email Satoshi ever sent and mapped the activity by hour. The finding was striking. Between 5 a.m. and 11 a.m. Greenwich Mean Time, Satoshi never posted, not once. This was a 6-hour window of consistent silence across hundreds of messages over 2 years. Someone sleeping during those hours would be living in a time zone where that window is nighttime, pointing to either Western Europe or the eastern seaboard of the United States. The British spellings, the London newspaper, and the sleep window all pointed in the same direction. By late 2010, something shifted. Satoshi's messages became less frequent. The community had grown. There were now hundreds of users, a handful of dedicated developers, and increasing media attention. Bitcoin had survived its first year, its first significant price movement, and its first serious technical debates. In December 2010, the tension became visible. A developer named Gavin Anderson proposed adding Bitcoin to a WikiLeaks hat, a donation mechanism to support the organization that had just published classified State Department cables and was under financial blockade from PayPal, Visa, and MasterCard. Satoshi's response was measured but unmistakably firm. It would have been nice to get this attention in any other context. WikiLeaks has kicked the hornet's nest and the swarm is headed towards us. Read in hindsight. This message tells you exactly where Satoshi's mind was. They were not thinking about whether Bitcoin should support WikiLeaks. They were thinking about whether government attention, arriving too early, could destroy Bitcoin before it was strong enough to survive it. By early 2011, Satoshi had all but stopped posting. The forum responses became rare, then absent. The code contributions stopped. The emails slowed to nothing. In April 2011, Satoshi sent what would turn out to be their final email. It went to Gavin Anderson, who had gradually taken over primary responsibility for the Bitcoin codebase. The message was brief. I've moved on to other things. It's in good hands with Gavin and everyone. Anderson read it, replied, and heard nothing back. The posts on Bitcoin Talk stopped. The email address went silent. The most consequential figure in the history of digital money simply ceased to exist, at least publicly. The handover was not chaotic. It was planned. Satoshi had transferred the domain registrations, the source code, repository access, and the network alert key, a tool allowing emergency broadcasts to all Bitcoin nodes, to Anderson months before the final email. When Satoshi left, they left nothing unfinished. The exit was as deliberate as the launch. The timing is also worth noting. In spring 2011, the U.S. Senate Homeland Security Committee sent letters to federal agencies requesting information about Bitcoin. The Silk Road, a dark web marketplace using Bitcoin, was becoming publicly known, and law enforcement attention was intensifying. Whether or not Satoshi was watching this development directly, the decision to disappear came at precisely the moment when staying visible was becoming dangerous. Is Satoshi Nakamoto even alive? This is the question investors almost never ask directly, and it may be the most important one. The Patoshi wallets, the 1.1 million Bitcoin identified by Lerner's analysis, sit frozen in the blockchain today. At various points in Bitcoin's price history, this fortune has been worth anywhere from a few $1,000,000 to more than $130 billion. The wallets are public, the addresses are known, thousands of blockchain analysts watch them in real time, every day. Not one Satoshi has moved in 16 years. There are four possible explanations. First, Satoshi is alive, principled, and deliberately refraining because moving the coins would destabilize the market they spent years building. An act of restraint so sustained, it constitutes the most compelling proof of concept of their own philosophy. Second, Satoshi is dead, and the private keys were never shared with anyone. The coins are locked permanently, as inaccessible as gold at the bottom of the ocean. Third, Satoshi is alive, but the private keys have been deliberately destroyed, a possibility some researchers consider likely, as it would permanently eliminate the possibility of government seizure or personal danger. Fourth, Satoshi is alive. The keys exist, and the plan is to move them at a specific moment for reasons we cannot yet anticipate. Every investor in Bitcoin has an implicit bet on which of these is true, even if they have never articulated it. The long-term value thesis of Bitcoin rests heavily on the Satoshi coins staying where they are. If they move on any exchange, at any price, the psychological impact would be unlike anything the crypto market has ever experienced. Not necessarily fatal. Bitcoin has survived extraordinary shocks, but unlike anything that has come before. In October 2009, 9 months after Bitcoin launched, and the same month Hal Finney received his ALS diagnosis, a computer science student named Marty Malmi sold 5,050 Bitcoin for $5.02 via PayPal. The implied price, $0.00994 per Bitcoin. It was the first recorded sale of Bitcoin for fiat currency. The buyer was a new Liberty Dollar enthusiast who wanted to experiment with the new system. Neither of them imagined they were participating in the birth of a multi-trillion-dollar asset class. The first formal exchange, Bitcoin Market, launched in March 2010, allowing anyone to buy or sell Bitcoin against the US dollar. For the first time, Bitcoin had a visible market price. It was less than 1 cent. 3 months later, in May 2010, a programmer named Laszlo Hanyecz made the first documented commercial transaction in Bitcoin history. He paid 10,000 Bitcoin for 2 large pizzas. At the time, this was approximately $41. As of the time of this recording, those same 10,000 Bitcoin are worth hundreds of millions of dollars. Bitcoin Pizza Day, May 22nd, is still celebrated annually by the community. In 2010, a programmer named Jed McCaleb repurposed a trading card exchange website called Magic, the Gathering Online Exchange, Mt. as a Bitcoin trading platform. He sold it to Mark Karpeles in 2011. Mt. became the dominant Bitcoin exchange, at one point handling more than 70% of all global Bitcoin trades. It was also catastrophically mismanaged. In February 2014, Mt. suspended trading, shut down its website, and filed for bankruptcy. Approximately 850,000 Bitcoin, then worth around $450 million, were missing. Some had been stolen over years through security vulnerabilities. Some appeared to have been misappropriated. The bankruptcy proceedings would drag on for a decade. The collapse was the first major test of Bitcoin's resilience. Would the network survive the failure of its largest exchange? It did. Bitcoin's price crashed more than 80% from its pre-collapse high, then it recovered, then it went higher. The network itself, the ledger, the blocks, the proof of work, continued operating without interruption throughout the entire crisis. Not a single block was missed. Not a single transaction was reversed. The protocol performed exactly as designed, regardless of what happened to the human institutions built around it. Satoshi had been gone for 3 years by the time Mt. collapsed. Bitcoin didn't need them. In 2015 and 2016, Bitcoin faced its most serious internal crisis. Not from external attack, but from a governance dispute within its own developer community. The question was simple: should Bitcoin increase the maximum block size to allow more transactions per second? The answer divided the community so completely that it nearly split Bitcoin into two incompatible networks. Gavin Andresen, the developer Satoshi had trusted with the codebase, supported increasing the block size. He proposed Bitcoin XT, an alternative client that would raise the limit from 1 MB to 8 MB. A company called Blockstream, founded in part by Adam Back-Warg, opposed this, arguing that the block size should remain small and that scaling should happen through second-layer solutions like the Lightning Network. The disagreement became intensely political. Forum moderators banned discussion of competing proposals. Accusations of corporate capture flew in both directions. Bitcoin Cash was born in 2017 as a hard fork implementing the larger block size. Bitcoin SV followed in 2018 as a fork of Bitcoin Cash. Neither destroyed Bitcoin. But the governance crisis revealed something important. Bitcoin, after Satoshi, was a system with competing interests. In the absence of its creator, who had the moral authority to settle disputes, was a genuine structural vulnerability. The question of who Satoshi was had become, briefly, a question about who had the legitimate authority to speak for Bitcoin's original vision. This detail matters because it connects the Satoshi mystery directly to Blockstream, and therefore to Adam Back, in a way that colors everything the New York Times investigation would later find. As of the time of this recording, Bitcoin has been running continuously for 16 years. It has processed billions of transactions. It has survived multiple price crashes of 70, 80% or more. It has survived regulatory attacks in China, India, and the United States. It has survived the collapse of major exchanges, the arrest of prominent figures in the ecosystem, and the discovery of serious bugs in its early codebase. It has survived the sustained multi-year fraud of Craig Wright, who claimed for nearly a decade to be Satoshi Nakamoto and brought the entire weight of the British legal system to bear on that claim before being ruled a liar by a high court judge. Through all of it, the network has kept running. Every 10 minutes, a new block. Every block, a new page in the ledger. Every page, proof that the system the Bitcoin founder built is doing exactly what it was designed to do, function without its creator. That is not a minor technical achievement. It is the central political statement of the entire project. Bitcoin works because the math works, and the math does not need anyone's permission. Hal Finney is the most emotionally resonant candidate in the Satoshi mystery, the man who was there at the beginning, who ran the first node, who received the first transaction, who died of a disease whose timeline aligns with disturbing precision to Satoshi's disappearance. He was among the most brilliant and most trusted figures in the Cypherpunk community. He had built reusable proof of work in 2004, a direct technical predecessor to Bitcoin's consensus mechanism. He was the first to publicly declare support for Bitcoin, tweeting, "Running Bitcoin" on January 11th, 2009. The circumstantial case for Finney is emotionally powerful. He was diagnosed with ALS in August 2009, 7 months after the network launched. The disease progressed rapidly. By early 2011, he had retired from work. By 2013, he was fully paralyzed, operating a computer using eye tracking technology. He died on August 28, 2014. His body was cryopreserved at the Alcor Life Extension Foundation in Scottsdale, Arizona, where it remains today. The timing of Satoshi's complete withdrawal from public life in mid-2011 coincides almost exactly with the period when Finney's illness would have made sustained technical correspondence essentially impossible. There's also a geographical coincidence that researchers find impossible to dismiss cleanly. Finney's home in California was within 2 miles of the residence of Dorian Prentice Satoshi Nakamoto, the man Newsweek would later falsely identify as Bitcoin's creator. Whether this is meaningful or simply the kind of coincidence that accumulates around any deep mystery is unclear. The case against Finney is strong on technical grounds. His coding style is documented. He contributed directly to Bitcoin in its early months, and experts who have compared his code to Satoshi's find them fundamentally different. In their public forum exchanges, Finney complained to Satoshi that Bitcoin had crashed when he tried to receive a transaction. An odd thing to do publicly if you are the author of the crashing code. The 2026 documentary Finding Satoshi revisited the theory that Finney worked in partnership with Len Sassaman, a cypherpunk cryptographer who died in July 2011, 1 month after Satoshi's final email. But Sassaman's widow denied any involvement, and the evidence remains circumstantial. When Forbes journalist Andy Greenberg interviewed Finney in 2014, using an eye tracker as his only means of communication, Finney denied being Satoshi with characteristic directness. I don't know what more I can say. Nick Szabo is, to many of the most serious researchers, the strongest candidate who has never been seriously prosecuted in mainstream media. He is an American cryptographer and legal scholar who designed BitGold, a system so structurally similar to Bitcoin that reading it today feels like reading a first draft of the white paper. His initials are NS, the exact reverse of SN. He has never denied being Satoshi with anything approaching the categorical directness that other suspects have employed, deflecting rather than refusing. The linguistic case for Szabo is the most rigorously developed outside of the NYT investigation. In December 2013, a blogger named Sky Gray published a stylometric analysis linking Szabo's writing to the Bitcoin white paper, identifying specific vocabulary, argumentative patterns, and technical framings that appeared in both. Nathaniel Popper, who spent years embedded in the early Bitcoin community while writing Digital Gold, still the most comprehensive history of Bitcoin's early culture, concluded independently that Szabo was the most plausible candidate. In 2015, Popper published his findings in the New York Times. Szabo's multidisciplinary expertise, simultaneously deep in cryptography, distributed systems, law, and economics, aligns with the white paper's unusual breadth more precisely than any other single candidate. This is why Nick Szabo remains, for many serious researchers, the most compelling answer to who is Satoshi Nakamoto. The case against Szabo has one argument that is genuinely difficult to dismiss. Satoshi cited Weidai's B money and Adam Back's Hashcash in the white paper, but did not cite BitGold, despite BitGold being structurally more similar to Bitcoin than either of those references. If Szabo wrote the white paper, this omission would require him to have deliberately hidden the intellectual predecessor, most likely to reveal his identity. This is possible, but awkward. There's also no correspondence between Satoshi and Szabo in any of the known archives. Striking, given that Satoshi was in contact with virtually every other major figure in the space. Fortune magazine's April 2026 coverage of the NYT investigation argued pointedly that Carreyrou dismissed Szabo too quickly, that Back's evidence, examined carefully, is no stronger than the case for Szabo, and that Szabo avoids several of the inconsistencies that dog the Back theory. This is a fair point. Szabo's case is not closed. In March 2014, Newsweek published what it believed was the definitive resolution of the Satoshi mystery. Reporter Leah McGrath Goodman identified Dorian Prentice Satoshi Nakamoto, a Japanese-American engineer living in Temple City, California, whose legal birth name happened to be Satoshi Nakamoto. Goodman pointed to his background in classified defense projects, his libertarian politics, his physics training, and a brief exchange in which Nakamoto appeared to confirm his connection to Bitcoin. It collapsed within hours. Dorian Nakamoto clarified that he had misunderstood the question. He thought he was being asked about classified defense contracting work, not cryptocurrency. He had no involvement with Bitcoin and had never heard of it before journalists appeared at his door. The linguistic analysis conducted for Forbes found his writing had no meaningful similarity to Satoshi's. That same day, a post appeared on the P2P Foundation forum from Satoshi's account, dormant since 2011, saying simply, "I am not Dorian Nakamoto." The real Satoshi had briefly surfaced from silence purely to deny someone else's identity, then vanished again immediately. The Dorian episode produced one lasting contribution to the mystery. It established that Satoshi was alive as of March 2014, or that, at minimum, someone with access to Satoshi's credentials was alive and monitoring the situation closely enough to respond within hours of a major news story. This fact is more significant than it is usually treated as being. Craig Wright is the longest-running and most damaging Satoshi claim in Bitcoin's history. In December 2015, Wired and Gizmodo simultaneously published investigations identifying Wright, an Australian computer scientist, as Satoshi. The evidence included leaked emails and documents suggesting Wright and his deceased business partner Dave Klayman had built Bitcoin together. For a period measured in hours, it seemed like the mystery might actually be solved. It was not. Within days, researchers found that the documents had been backdated, the metadata had been altered, and the key technical evidence was fabricated. In May 2016, Wright staged a public cryptographic demonstration claiming to prove his identity and produced a signature that experts immediately recognized as recycled from publicly available data, not a valid proof of private key ownership. Developer Jeff Garzik called it proof of nothing. Security researcher Dan Kaminsky called it intentional scammery. Wright spent the following years filing lawsuits against anyone who called him a fraud. He registered U.S. copyright for the Bitcoin whitepaper. He filed a lawsuit claiming $911 billion in damages against Jack Dorsey's company Block. He pursued critics in English courts using libel law. The entire enterprise consumed enormous community resources and produced nothing except legal bills and confusion. In March 2024, the UK High Court ended it. Judge James Mellor, after a month-long trial, ruled that Wright was not Satoshi Nakamoto, that he had not written the white paper, had not created Bitcoin, and had forged the documents he submitted as evidence. The judge found that Wright had lied to the court extensively and repeatedly. In December 2024, Wright was sentenced to 1 year in prison, suspended for 2 years, for contempt of court. His website now carries a court-ordered notice declaring that he is not Bitcoin's creator. The Craig Wright era consumed nearly a decade of the community's attention and produced one useful output, a definitive legal ruling that can no longer be appealed. In October 2024, HBO aired Money Electric: The Bitcoin Mystery, directed by Cullen Hoback, the same filmmaker who had made a documentary about QAnon. The film's conclusion? Peter Todd, a Canadian Bitcoin developer and former contributor to Bitcoin Core, was Satoshi Nakamoto. Hoback's primary evidence was a forum reply Todd had written in response to one of Satoshi's last technical posts, a reply that appeared to complete Satoshi's thought rather than respond to it. He also cited Satoshi's use of Canadian English spellings and the observation that Satoshi's most active posting periods coincided with times when Todd, as a student, would have been on holiday. The crypto community's response was near universal rejection. Todd himself responded with exasperation and dark humor, calling the evidence conspiracy thinking level flimsy, and drawing pointed irony from the fact that the director of a QAnon documentary had applied QAnon-style coincidence reasoning to identify the Bitcoin creator. Beyond the weakness of the evidence, the documentary created a real personal safety crisis. Todd was briefly forced into hiding after receiving threats. Hoback doubled down in interviews, without producing anything approaching cryptographic proof. The theory was functionally dead within weeks of the documentary's premiere. Before we get to the most serious investigation ever published, it is worth clearing one final layer of noise. Every few years, a new name surfaces. Elon Musk, various intelligence agencies, fringe theories connecting the name Satoshi Nakamoto to Japanese corporate acronyms, even claims that a CIA program built Bitcoin. None of these has ever produced a credible piece of evidence. The real Bitcoin founder left no ego trail, no press hunger, no financial motive to reveal themselves. That restraint, maintained for 16 years against every possible incentive to speak, is itself the most important clue of all. Anyone who wants attention is already disqualified. Adam Back, the New York Times investigation. And now we reach April 2026, the most serious, most methodologically rigorous, most credentialed investigation into the Satoshi Nakamoto identity that has ever been published. John Carreyrou is not a technology journalist. He is the reporter who spent years investigating Elizabeth Holmes and Theranos, produced a Wall Street Journal investigation that brought down a $9 billion fraud, and wrote Bad Blood, one of the most celebrated works of business journalism of the past decade. He is a Pulitzer Prize winner. He approached the Bitcoin investigation with the methodology of a fraud investigator. Build the documentary record first, then test it against the subject. He spent 18 months building a database of 134 and 308 posts from 3 Cypherpunk mailing lists active between 1992 and 2008. He ran 3 separate stylometric analyses using different methodologies. All 3 returned the same result. Adam Back was the closest linguistic match to Satoshi's writing in the entire archive. The specific findings were granular. Back shared 67 of the 325 distinct hyphenation errors found in Satoshi's corpus, nearly double the next closest suspect. He and Satoshi used the same obscure technical phrases, partial pre-image and burning the money, that appeared in no other candidate's writing across the entire 134,000 post database. The circumstantial case is layered and specific. Back went nearly silent on the cryptography mailing list during 2008 through 2011, exactly the years Satoshi was active. He resurfaced on Bitcoin forums in April 2013, 6 weeks after Satoshi's final message. In posts from a decade before Bitcoin's launch, Back had outlined virtually every technical element of the system: distributed nodes, hashcash-based coin minting, automatic supply adjustment, immutable timestamping. He's British, grew up in London, writes with British spellings, used double spaces after periods in older writing. He grew up in the same city where the Times newspaper, cited in the Genesis block, is published. During a 2-hour filmed interview with Carrie Rowe in El Salvador, Back denied being Satoshi at least 6 times. At one point, Carrie Rowe quoted a line from Satoshi's writing, "I'm better with code than with words." And Back responded, "I did a lot of talking, though, for somebody. I mean..." He stopped himself. Carrie Rowe heard this as Back momentarily speaking from Satoshi's perspective. Back called it a conversational slip. There's also a business dimension that makes this more than a historical question. Back has co-founded a Bitcoin treasury company, structured similarly to Strategy, that is in the process of going public through a merger with a shell company created by Cantor Fitzgerald. As a CEO of a public company, Back would be legally required to disclose material financial information to investors. A Bitcoin hoard of $80–100 billion is, by any reasonable definition, material. The NYT Bitcoin investigation was not merely historical. It was implicitly asking whether investors in Back's company have the right to know if their CEO is the wealthiest person in human history. Back's denial was immediate. "I'm not Satoshi," he wrote on X the day the article published, "but I was early in laser focus on the positive societal implications of cryptography, online privacy, and electronic cash." Blockstream issued a statement calling the investigation built on circumstantial interpretation of select details and speculation, not definitive cryptographic proof. The crypto community's response was largely skeptical. Cybersecurity researcher Robert Graham noted that Back's and Satoshi's open source code don't look remotely similar, a point that Carrie Rowe's linguistic analysis does not address. Fortune magazine argued that the investigation suffered from confirmation bias, and that Carrie Rowe had dismissed Nick Szabo too quickly. Tech writer Malik argued in Fortune that the entire unmasking impulse was misguided. With Satoshi, the anonymity is the architecture. Unmasking either one isn't just invasive, it is destructive to what they built. There is no cryptographic proof. There has never been for any candidate. The only evidence that could definitively close this case is a signed message from one of the original Satoshi wallets. That has not happened in 16 years. It may never happen. Here is the thing that almost every piece of coverage about the Satoshi mystery misses. The mystery is not a failure of the investigation. The mystery is a feature of the system. Satoshi's anonymity is not incidental to Bitcoin. It may be the single most important architectural decision in the project's entire history. Consider the record of every previous attempt to build money outside the state. David Chaum's DigiCash filed for bankruptcy when governments pressured banks not to adopt it. eGold, launched in 1996 by Douglas Jackson as a digital currency backed by physical gold, was shut down by the U.S. Department of Justice in 2007. Jackson was convicted on money laundering charges. Liberty Reserve, a digital currency operation, was shut down by the U.S. government in 2013 in one of the largest money laundering prosecutions in history. Its founder was arrested in Spain and extradited. PayPal, in its earliest days, aspired to become a global currency outside the banking system. Regulatory pressure converted it into a payment processor for existing currencies. Every attempt to build alternative money had a single point of failure: the person who built it. Satoshi understood this with a clarity that is still remarkable. They did not register a company. They did not patent the technology, leaving it open source and legally unownable. They did not create a foundation with a board that could be pressured. They built the system, handed it to a community of thousands, and disappeared before any government agency had organized a response. By the time the U.S. Senate Homeland Security Committee was asking questions about Bitcoin in 2011, its creator was already gone. Bitcoin is the first monetary system in history launched without an identifiable human owner. That is not a bug. That is the most sophisticated legal and political maneuver in the history of financial technology. On Satoshi's public profile on the P2P Foundation forum, a birthday is listed, April 5th, 1975. It is almost certainly not their real birthday, but it is almost certainly not random. April 5th, 1933 was the date Franklin D. Roosevelt signed Executive Order 6102, the order that made it illegal for American citizens to own gold and required them to surrender their holdings to the Federal Reserve at a fixed government price. Citizens who refused faced fines of up to $10,000 and up to 10 years in prison. For 42 years, Americans could not legally hold monetary gold. The ban was lifted on December 31st, 1974, with the change taking effect on January 1st, 1975, the year on Satoshi's profile. Satoshi chose as their birth year the year Americans regained the legal right to hold real money. They chose as their birthday the anniversary of the day that right was first taken away. This is not someone who stumbled into monetary philosophy. This is someone who had been thinking about the relationship between governments, monetary confiscation, and individual sovereignty for a very long time, and who encoded the thinking into the metadata of a public profile, the way they encoded a newspaper headline into an immutable block of code. Let's be direct about the investor implications, because this is not just an intellectual puzzle. The unresolved identity of Bitcoin's creator is an active risk factor in every Bitcoin portfolio. If Satoshi is definitively identified, through legal process, journalistic investigation, or voluntary disclosure, several things happen simultaneously. The Patoshi wallets become legally attributable to a real person in a real jurisdiction. That person faces immediate tax liability that could run into tens of billions of dollars. In the United States alone, long-term capital gains on $80 to $100 billion in Bitcoin would represent a tax bill measured in the dozens of billions. They would face potential legal action from governments that view early Bitcoin mining as operating an unlicensed money transmission business. They would face personal security threats from every criminal organization sophisticated enough to understand what those private keys represent. The Adam Back IPO scenario makes this concrete. Back is currently taking a company public. If he is Satoshi, and if a regulator concludes this after the IPO, investors in his public company would have grounds to argue they were not fully informed about material facts. An $80 to $100 billion Bitcoin hoard held by a public company CEO is not a footnote. It is potentially the defining fact of the entire investment. Securities law around disclosure of material information is not optional. The NYT investigation was not purely historical. It was raising a live regulatory question. And here is the deepest irony. If Satoshi's identity is confirmed and those coins are forcibly moved through legal seizure, tax collection, government order, it would represent the precise thing Bitcoin was designed to prevent: a government confiscating a person's monetary holdings without consent. The system designed to make monetary confiscation impossible would have its creators' coins confiscated by the very governments it was designed to circumvent. Bitcoin would have protected everyone except its own inventor. And that is a thought that changes how you see the future of money. Let's be precise about what Carey-Rue showed and what he didn't. He showed that Adam Back's writing, across 134,000 archived posts, matches Satoshi's more closely than any other candidate by the metrics his analysis measured. He showed overlapping timelines, shared technical vocabulary, a suspicious silence gap, and a specific conversational moment that he found suspicious. He raised a genuine question about the intersection of historical mystery and live securities law. What he did not show: cryptographic proof. No signed message from a Satoshi wallet. No evidence that Back controls any private key associated with the Genesis block or the Patoshi wallets. No confession. No corroborating witness with direct knowledge. By the standard that would actually close this Bitcoin investigation, the standard the technical community has always required, Carey-Rue proved nothing. The mystery survives the best investigative effort in its history, produced by the best investigative journalist in American business media. This is not a criticism of Carey-Rue. It is a statement about the nature of the problem. Satoshi constructed a mystery that may be genuinely unsolvable by conventional investigative methods. The only evidence that can close it is controlled by the person who built it, and that person, for 16 years, has chosen silence. For investors, the Satoshi mystery has direct market implications. There are 3 specific events worth monitoring, and understanding them is part of knowing the real risk profile of the asset. The first is wallet movement. The Patoshi addresses are publicly known and watched by thousands of blockchain analysts in real time. Any transaction from one of those wallets would be detected within seconds and would represent the most significant event in Bitcoin's history since the Genesis block. This has not happened once in 16 years. Every day that passes without movement is a data point, accumulating slowly in the direction of either permanent loss or deliberate and absolute restraint. The second is cryptographic proof of identity, the only mechanism that can definitively identify the real Satoshi Nakamoto, that the technical community would universally accept, is a signed message from one of the original wallets. This cannot be faked. It cannot be replicated. If Adam Back, Nick Szabo, or anyone else ever produces this proof, the mystery ends. This has not happened. The third is regulatory action against a named suspect. The NYT investigation raised a specific scenario. If Back completes his company's public offering without disclosing the Satoshi wallets, and if a regulator subsequently determines he is Satoshi, the legal consequences, for him, for his investors, and potentially for the Bitcoin market, would be significant. This is a live legal question with real financial stakes. It is not hypothetical. It is developing in real time. What history tells us about anonymous founders: Satoshi is not the only figure in history to build something transformational and then vanish, but the combination of scale, anonymity, and unclaimed wealth is genuinely unprecedented. The closest analogy is not a technology founder. It is something more like the anonymous authors of foundational scientific works, or the pseudonymous creators of certain artistic movements. But none of them left behind a fortune approaching $100 billion. None of them built a system that is, 16 years later, still running without them. What the history of mysterious figures tells us is that mysteries usually resolve not through dramatic revelation, but through the gradual accumulation of evidence that reaches a threshold where the probable answer is clear, even without definitive proof. Carrie Rue's investigation may be that threshold for Adam Back. The fortune counter argument suggests it may be that threshold for Nick Szabo. The technical community's skepticism about both suggests that the threshold has not yet been reached. What seems increasingly clear is that Satoshi was either a single person of extraordinary and unusual multidisciplinary depth, simultaneously expert in distributed systems, cryptography, economics, game theory, and software architecture, or a very small group working in extremely close coordination. The consistency of voice across 3 years of correspondence argues against a large group. The breadth of expertise argues against a single person with a narrow background. The working theory of many serious researchers, that 2 or 3 people, sharing a single pseudonym, built Bitcoin together and coordinated their disappearance, is not provable, but it is coherent. 16 years ago, someone looked at the financial system that had just destroyed itself and millions of lives in the process, and decided to build an alternative. They did not ask for permission. They did not file for recognition. They did not announce themselves. They built the system, tested it quietly, handed it to a community, and disappeared so completely that a Pulitzer Prize-winning journalist with 18 months and the resources of the New York Times could not produce a definitive identification. That disappearance, that sustained, perfect 16-year silence, is itself an argument. It says this system does not belong to any person. It belongs to the math. It runs because the incentives run. It has value because independent actors around the world have each concluded independently that it has value. And none of that conclusion depends on knowing who built it, or trusting that person, or hoping they will continue to behave well. Bitcoin is the first time in history that money has been separated completely from its creator. Not just in practice, in design. Satoshi didn't just build Bitcoin and leave. They built Bitcoin in a way that required them to leave, where their continued presence would have been a centralizing force that undermined the decentralization the system was built to achieve. The disappearance was not a departure from the design. It was the final implementation of it. And that is why the future of money looks different now than it did before January 3rd, 2009. So the Times, 03 stars, John 2009, Chancellor on brink of second bailout for banks. Whoever wrote those words embedded them in the first block of a system that will outlast every institution that was failing when they wrote it. The message is still there. It has always been there. Block 0, immutable, permanent, proof that someone, somewhere understood exactly what they were building and built it anyway. We may never know who they were. We already know what they did.